Welcome to Lesson 10 of Week 13, focusing on grant closeout. This lesson covers the administrative requirements for properly concluding a grant award and transitioning from active management to completed status. Every grant must end. Closeout is the formal process of concluding the award, submitting final reports, resolving any outstanding issues, and ensuring all obligations are met. Proper closeout protects your organization, satisfies funder requirements, and demonstrates professional grant management. Closeout is not just paperwork, it has real consequences. Failure to close out grants properly can result in withheld payments on current awards, delayed processing of future awards, negative audit findings, and reputational damage with funders. Conversely, clean closeouts build credibility and demonstrate organizational competence. This lesson teaches you when closeout begins, what deliverables are required, how to handle common closeout challenges, and how to ensure your grant ends as professionally as it was managed. By the end, you will understand closeout as a planned process rather than a scramble when funding ends. Closeout accomplishes several important objectives that benefit both recipient and funder. Understanding these objectives helps you approach closeout purposefully. Final accountability demonstrates proper use of all funds throughout the award. The final financial report shows total expenditures, confirms funds were used for intended purposes, and accounts for any unexpended balance. This accounting provides closure on the financial relationship and confirms responsible stewardship. Record completion ensures all required documentation is finalized. Final performance reports document what was accomplished. Invention reports disclose any intellectual property. Equipment reports account for purchased assets. All required reports must be submitted for closeout to complete. Obligation resolution addresses any remaining commitments or disputes. Unliquidated obligations must be resolved. Any questioned costs or audit findings must be addressed. Disputes about allowability or compliance must be concluded. Closeout cannot complete with significant unresolved issues. Administrative conclusion formally ends the award relationship. Once closeout is complete, the grant number becomes inactive. No additional charges can be posted. The award moves from active management to historical records. This formal conclusion creates clear boundaries. The closeout timeline establishes when various activities must occur. Understanding this timeline helps you plan and meet deadlines. Project end date is when the approved project period concludes. This date is specified in your notice of award. After this date, you can no longer incur new obligations against the grant. The project end date triggers the closeout process. Liquidation period provides time to pay remaining obligations after the project end date. Typically, this period is 90 days. During liquidation, you can pay for goods and services that were ordered before the end date but not yet paid. You cannot incur new costs, but you can settle existing commitments. Report deadlines specify when final reports are due. Final financial reports and final performance reports are typically due within 90 to 120 days after the project end date. These deadlines are firm. Missing them delays closeout and can affect other awards. Administrative processing occurs after you submit final reports. The funder reviews your submissions, verifies completeness, and processes the formal closure. This may take additional time depending on funder workload and any issues that arise during review. The final financial report provides comprehensive accounting for the entire grant period. This report is essential for proper closeout. Cumulative expenditures document total spending across the entire project. Unlike interim reports that cover single periods, the final report shows everything from start to finish. These totals should reconcile to your accounting records and match cumulative figures from prior reports. Budget reconciliation compares actual expenditures to the approved budget. While some variance is expected and permitted, the final report shows how your actual spending pattern compared to plans. Significant deviations should be explainable based on approved changes or legitimate project evolution. Unexpended balance identifies any remaining funds. Federal grants generally require return of unexpended funds. Your final report shows how much remains unspent, and this amount is typically deobligated by the funder. Do not assume you can keep unspent funds. Plan to return them unless your award provides otherwise. Cost share documentation provides final accounting of matching contributions if your award required cost sharing. You must demonstrate that you provided the committed match. Final cost share amounts should meet or exceed your obligation. Failure to meet cost sharing requirements can result in proportional reduction of the federal share. The final performance report documents what your grant accomplished. This report summarizes the entire project, not just the final period. Accomplishment summary describes what the project achieved over its entire duration. This is your opportunity to present the complete story of your grant. What did you do? What did you learn? What resulted from the investment? The final report should convey the full scope of your work. Objectives assessment evaluates how well original objectives were met. Did you achieve your specific aims? If not, why not? If you exceeded expectations, highlight that. Honest assessment of objective achievement provides accountability for the outcomes you promised. Products generated provides a complete listing of publications, datasets, patents, and other tangible outputs. This comprehensive catalog documents everything your grant produced. Include items in progress as well as completed products. The products list demonstrates productivity and impact. Impact statement describes the significance and broader effects of your work. How did your project advance knowledge? What difference does it make to the field or society? Impact statements help funders understand the value of their investment and may influence future funding decisions. Invention and patent reporting is required for grants that might generate intellectual property. Even if you have no inventions to report, you must confirm this. Disclosure requirements mandate reporting any inventions conceived or first reduced to practice under the grant. An invention includes any new and useful process, machine, manufacture, or composition of matter. If your grant-funded work led to patentable discoveries, you must disclose them. The Bayh-Dole Act governs intellectual property from federal funding. This law allows recipients to retain title to inventions while giving the government certain rights. Understanding Bayh-Dole helps you navigate your obligations and rights regarding grant-funded inventions. Your institution's technology transfer office can provide guidance. Invention reports are submitted through iEdison or other agency-specific systems. iEdison is the interagency system for reporting inventions to federal agencies. Reports document what was invented, when it was conceived, and how it relates to your grant. Timely reporting is required. Negative reports confirm no inventions if none occurred. Even if your grant produced no inventions, you must submit a final invention statement confirming this. The absence of inventions must be affirmatively reported. Closeout cannot complete without this confirmation. Equipment purchased with grant funds has specific disposition requirements at closeout. Understanding these requirements ensures proper handling. Title vesting determines who owns equipment purchased with grant funds. Under most federal awards, title vests with the recipient organization. However, the funder retains interest in ensuring equipment serves appropriate purposes. Check your award terms for specific title provisions. Continued use allows equipment to continue serving its original purpose after grant end. If equipment is still being used for the project type it was purchased to support, it can generally remain in use. Equipment does not need to sit idle just because the original grant ended. Disposition options include transfer, sale, or retention depending on circumstances and rules. Equipment no longer needed might be transferred to another project, sold with proceeds handled according to requirements, or retained if still serving appropriate purposes. Funder approval may be required for certain dispositions. Documentation must be maintained for equipment and its disposition. Records should show what equipment was purchased, where it is located, how it is being used, and what disposition occurred if it was transferred or sold. Equipment records must be retained as long as the equipment is in use. If your grant included subrecipients, their closeout must be coordinated with your overall closeout. This adds complexity that requires planning. Cascading requirements mean pass-through entities must close out subrecipients before completing their own closeout. You cannot finalize your reports if subrecipient information is outstanding. Build subrecipient closeout into your timeline to avoid delays. Final invoices must be collected from all subrecipients. Subrecipients need clear deadlines for submitting their final charges. These amounts must be incorporated into your final financial report. Late subrecipient invoices can hold up your entire closeout. Final reports should include subrecipient contribution to final reporting. If subrecipients conducted work that contributes to your accomplishments, their input should inform your final performance report. Coordinate with subrecipients to gather information about their activities and results. Compliance verification confirms subrecipients met requirements throughout the award. Did they submit required reports? Did they follow applicable regulations? Were there any compliance issues? Verifying subrecipient compliance is part of your oversight responsibility as the pass-through entity. Records retention takes on new importance at closeout as the retention period clock begins. Proper records management ensures availability for potential future needs. Retention period begins when final reports are accepted by the funder. The clock does not start at project end date, but rather when closeout is actually complete. Until your final reports are accepted, the retention period has not begun. Standard duration is 3 years from final report acceptance. During this period, all grant records must be retained and accessible. This includes financial records, personnel documentation, procurement files, correspondence, and all other materials supporting the grant. Extended retention applies if audit, litigation, or other proceedings are pending when the normal retention period would expire. Records must be kept until all such matters are fully resolved, even if that extends beyond 3 years. Do not destroy records that might be needed for ongoing matters. Retention responsibility falls on your organization. Ensure someone is responsible for maintaining records after the grant ends. Project staff may move on, but records must remain accessible. Establish clear procedures for archiving grant records and retrieving them if needed later. Common closeout challenges can delay completion and create compliance problems. Anticipating these challenges helps you avoid them. Late start is perhaps the most common problem. Waiting until the project end date to begin closeout, planning leaves insufficient time. Closeout should be planned months in advance, with activities sequenced to meet deadlines. Starting early prevents last-minute scrambles. Missing information becomes problematic when staff who worked on the grant have departed. If they left without documenting their activities or transferring knowledge, reconstructing information for final reports is difficult. Maintain good records throughout so closeout does not depend on departed staff's memories. Subrecipient delays occur when subrecipients do not submit their final invoices or reports on time. Your closeout depends on their timely submission. Communicate deadlines clearly and follow up persistently. Build buffer time into your schedule to accommodate potential subrecipient delays. Unliquidated obligations are commitments made before project end but not yet paid. Outstanding purchase orders, pending travel reimbursements, or unpaid invoices must be resolved during the liquidation period. Track obligations carefully so you know what remains outstanding at project end. Planning for closeout should begin well before your project ends. This timeline helps you prepare systematically. 6 months out, begin tracking deadlines and gathering information. Review your closeout requirements. Confirm report deadlines. Start collecting information for final reports. Identify any potential problems that need resolution before grant end. Early attention prevents surprises. 3 months out, finalize spending and wrap up activities. If you have remaining funds, ensure they are committed to appropriate purposes. Complete major activities and begin summarizing accomplishments. Confirm subrecipients understand their deadlines. This is the time to tie up loose ends. At end date, stop incurring new obligations. No new commitments can be made after the project period ends. Begin the liquidation period during which you pay outstanding obligations. Shift focus from conducting activities to completing administrative requirements. After end date, complete reports within required timeframes. Submit final financial and performance reports by their deadlines. Submit Invention reports. Complete any other required closeout submissions. Monitor for funder acceptance and respond to any questions or requests for additional information. Spending down remaining funds near grant end requires care to avoid compliance and appearance problems. Appropriate use means only allowable costs that support project objectives. The fact that you have remaining funds does not change allowability rules. Last-minute purchases must be just as necessary, reasonable, and allocable as any other expenditure. Do not buy things just to use up money. Timing awareness means spending before the end date. During the liquidation period after project end, you can only pay for obligations incurred before the end date. You cannot incur new costs during liquidation. If you want to spend remaining funds, the commitment must be made before project end. Avoid appearance issues because end-of-grant spending receives scrutiny. A pattern of large purchases right before grant end looks like spending to avoid returning funds. Even if each purchase is legitimate, the pattern raises questions. Spread spending appropriately throughout the project rather than concentrating it at the end. Document carefully because late expenditures should be well justified. If you make significant purchases near grant end, ensure documentation clearly establishes the project need and why the timing was appropriate. Good documentation protects you if questions arise during closeout or audit. Returning unexpended funds is a normal part of closeout that should be planned for rather than avoided. Federal requirement means unexpended federal funds generally must be returned. If you did not spend all the money, the remainder goes back. This is not a penalty or negative reflection. Research projects often have small unexpended balances due to cost savings or activities that cost less than budgeted. Calculation method determines unexpended balance by comparing total received to total expended. Your final financial report shows these amounts. The difference is the unexpended balance. Ensure your calculations are accurate because this determines how much you return. Return process involves funds being de-obligated by the funder after reviewing your final report. You typically do not write a check. Instead, the funder reduces the award amount by the unexpended balance. If you received advances exceeding your expenditures, you may need to return actual cash. Timing means return occurs as part of closeout, not immediately at project end. The unexpended balance is determined from your final report and processed as part of closeout. You have the liquidation period to finalize spending before the balance is calculated. After closeout completes, certain aspects of the grant relationship continue while others conclude. Grant becomes inactive means no further charges can be posted to the grant account. The award number is closed. Any costs incurred after closeout cannot be charged to this grant. Ensure all legitimate charges are posted before closeout completes. Records remain accessible even after the grant is closed. Your retention obligation continues for the required period. Records must be retrievable if auditors have questions or if you need to reference past activities. Maintain organized archives that can be accessed when needed. Acknowledgement continues in publications and presentations resulting from grant-funded work. Even years after closeout, publications should cite the grant support that enabled the research. Proper acknowledgement is an ongoing obligation that outlasts the active grant period. Relationship continues with program officers who may support future proposals. The professional relationship you built during your grant does not end at closeout. POs remember how you managed your award. Clean closeout reinforces positive impressions that benefit future interactions. Let us summarize the key points from this lesson on grant closeout. Closeout formally concludes your grant with required reports and accounting. Final financial reports, final performance reports, invention disclosures, and equipment dispositions all must be completed. Unexpended funds are returned. The award is formally closed and becomes inactive. Essential practices include planning early so closeout does not become a last-minute crisis, meeting all deadlines for required submissions, and resolving outstanding issues including subrecipient closeout and unliquidated obligations. Systematic attention to closeout requirements ensures smooth conclusion. Documentation maintained throughout the project supports smooth closeout. Complete records make final reporting easier and provide the foundation for any audit that might occur during the retention period. Good documentation throughout means closeout is summarization rather than reconstruction. In our final lesson for this week, we explore using AI tools to support reporting tasks. You will learn how artificial intelligence can assist with drafting progress reports, organizing accomplishments, and handling other reporting responsibilities while maintaining accuracy and compliance. Practice exercise. If you have a grant approaching its end date, create a closeout timeline with all required submissions and their deadlines. If you do not have a grant ending soon, review your current grants and note when each will require closeout planning to begin.